Welcome to Trading Lounge and the Commodity Futures Report for Thursday, June 23rd. Just looking at the US yields here, we're looking at an impulse wave to the upside here as wave 1 and 2, and then 1 and 2 and a nice 5-wave structure here. So what we've got at the 3% here, we'll probably see a pullback here in due course. We may get one more little high here, but we should see a classic trading levels pattern here. So that means the arrival, the reaction, the first high above the level, and then an ABC coming back for wave 4 and then pushing higher. So we're looking up at wave 5 and 3 and 4, so still climbing higher, and this particular pattern here will look like this here. So we've got the arrival and the reaction, and we're in this process here, moving up here. This is normally in 5 waves, so then we'll see it pull back across this 3% level here and then move up from that point. The other point here too is, I'm not sure if I discussed it last time, is this, when counting this as wave 1 and 2 here, it's a little bit tricky with this these particular sharp moves here. But if we look at the 5-year Treasury rates here, let me just bring this in here. You can see that we've got a cleaner low coming in here, not so sort of spiky. So we can see that 1, 2, 3, 4, and 5 here. Probably easier on the 2 here. Let me just bring this into the, thought we could bring that into the weekly, but it's not the case. But still a cleaner finish on these lows down here, but you can look at that in your own time. So moving over to the US dollar here, US dollar index, the DXY. So we've got wave 1 and 2 here, and we've got 1, 2, nice little 1, 2, 3 up here, 4, 5 for the 4th and here, and then 1, 2, 3, 4 and up here for the, so we've got the top of the 3rd here, as you probably know. We're looking for the A wave, the B wave, and the C wave. The B wave has taken the top out here, so we'll be looking at a flat correction, so an expanded flat, so an A and a B, and coming down for the C wave here. While this is moving down, we'll see the S&P and the DAX and all that move up. We'll also see the euro move up as well. So we're long in the euro at the moment. It's possible for this move here to have wave 4 sitting over here. So if we break into a little new high here, I won't bother going to the intraday at the moment on this. You can have a look at this on the euro video today. If we do push high here, then we'll have to put wave 5 top in at that point, and that would be sort of significant because I'm waiting for this to get a low in the S&P and the the tech stocks and all the rest of it. So we'll be able to merge that in there. So I'll just leave that at the time being. We've got a lot to get through. On the US spot gold here, this is the monthly chart, and the reason for showing this is just the stochastics here clicking over into a short situation, and likely because we're already moved down. The question is how do we handle this top here? There is the possibility that wave 5 top could be in here. It's a little bit sort of shy of having a decent particular structure in there, so I'm not keen to do that. But there is 2 ways to look at this on the, we'll go to the weekly chart. This is a 2-week chart here. One of them is a very simple A wave here, an A and a B and a C wave for the B wave, and then coming in 5 waves down here. So pulling back down, because we pulled to the top here, we'll pull back down into the 1650 area. And the other pattern is looking at all of this in a triangle pattern on the 1-week chart here. A little bit more complicated, but in this case here we've got wave A here, wave B here, wave C here, and wave D, and then wave E here, and then we move up. So to confirm this here, obviously we need a move to push up here, because we've only got part of the structure here as an A wave, a B wave, and a C wave here. So when we go to the daily chart, we'll have both counts here working on this, so it'll look a little bit complicated here. Let me just get a bit more visual in on this chart here. So it's got 2 counts here. One of them is that from the top here we can look at down for wave 1, back for 2, then down for 1 here, back for 2 here, and then moving down lower through here. And in this case, we still expect a little rally to come in and then move down. And the triangle case would be looking at this as an A and a B and a C wave here for the C wave, and then an A and a B, and then 5 waves up here for a C of D, and then an E wave over here. So it's a bit howdy-doody. It's a bit all a bit sort of complicated on this. We're also looking at GDX here just on the daily chart as a bit more of a bearish count. Now it's possible to look at all of this as wave 1 and 2 here, but I've broken it down to 1 and 2 and 1 and 2 here, and then 1 and 2 with a slight rise here. We'll look to go short on the breach of these lows, and we'll be pulling down to the 25 at that point. So just keeping it really simple on the daily, and no need to go to the intraday at the moment because we've got a lot to get through. This is silver here. So this is the daily chart for silver. So in this case here, from a bit the same as gold really in its own way, and the same as, you know, copper as well. Copper's got the same pattern here where all these metals are, you know, all same but different in their own way. But if we take this as wave B here, we can look at it in a couple of different ways. We can look at it as an A wave, a B wave, and a C wave here, as a C wave, and then an A, B, C for the D wave, and then an E wave over here, the same as gold. Or we'll look down as 1, 2 here, 3 here, because it's such a long move down in this 5-wave structure as wave 3 here, wave 4 here. That's the 38.2% retracement level, and working a little bit and working lower at this point. So we'll just see if that pops to the upside here and how that stays. The main point here, I would go to the intraday on all of these if I could see a trade in here, but they're all consolidating and vibrating in short spans. It's just not worth the risk reward factors, just not there to get involved in that. Over to the soft commodities, so the DB Agricultural ETF here. There's a couple of things I want to talk about here today. So let's just go to the weekly chart for a moment, shall we, and just have a look at the bigger picture. So the bigger picture here is obviously we've seen this massive trend coming down through here, and we could count that whole thing as an ABC correction, as an A wave here, B wave here, and 5 waves down here. I understand that. Now, this move to the upside here, I want to talk about that a bit. This is a weekly chart. We can see that the stochastic is moving down quite nicely. So, but obviously it's not ready either yet to take a buy, but it's probably 2/3 of the way there for that. So we've got to kind of take that on board. Oops, daisy. Take that on board in its own way. But I wanted to talk about this particular structure here because it's quite easy to see from this point here as 1 and 2, then 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and 5th wave. So we've got 5 waves to there. I can also count, depending on how you want to count this, as 1, 2, 3, 4 here, and up for 5 for 1 and 2. I can count that differently, and 3, 4, 5. So I could nail that in there. One of the problems with this trend here, though, is that from this low here, we can take that distance rather and put it here, and we can see that this leg here is shorter. So the reason for this, so there's no way that I could look at this as wave 1 here and 2 here and then 3 here and 4 here unless we have a short wave 5, which is probably not the case. So we've either got to look at this as an A wave, a B wave, and a C wave here, and we can get one more top out of it here, but we don't want that going any lower than that previous low here, or just about there, and we can look at that going there. Otherwise, we need to look at this as wave 1 and 2 and 1 and 2 here. So just going back to the daily chart for a moment, now that you've sort of taken all that on board, if you have indeed done that. So with this situation here, I've got it labeled as from the low here as 1, 2, 1, 2, 3, 4, 5 for 3, 4, and 5. So we could look at this as wave 1 or wave A. If we look at it as wave A, then we need to look at this as wave B, and then we need to look at this as wave C up here having a top, either a top being in play now, or there is a possibility of one more move up here here, this has been our target here for this wave 4 here, but if that doesn't hold and this moves back down here, then we need to create a top in here for this. And you know, we will quickly zip through the soft commodities, some of these top ones here anyway, and we can see that they still have further to move down. So it's likely the only way we can count this is 1 2 3 4 5 for 1, and then back for 2, and then all of this move up here as 1 and coming back for 2 here, and then going up for wave 3 at that point. We've either got that or we've got an A and a B and a C wave in as a top here. I don't think we've got the top in play here, because when I look at some of the commodities, I can see that the move down is corrective. So yeah, I mean, from this point here as this low here going up for wave 1 here and back for wave 2, this would be the 50-60% retracement level area here. So we will spend some time here. So we've got time to work on all of that. So this is corn here. So with corn here, we've got 5 waves here. We've got a little 5 waves in here. We've got a corrective wave here that we're looking at last time, and now we've got another. We're coming down into this area here. So corn is coming lower. I don't spend too much time on these, but I find wheat very interesting because this particular pattern here is the A wave, the B wave here, and then the C wave coming down here further. So this still needs to come down here further. Now the thing here is that I don't really want to call that in as a top and look at this as wave 1 here. Yes, I can count down as 1 here, an A and a B and a C, back for 2 here, 3, 4, 5. I can get 5 waves out of here, but my problem is that if that's wave 1, you know, because we've got a top in play, this wave 2 here is humongous in compared to the ratio of wave 1 here. So it doesn't really make sense to me. It counts better as an A and a B and a C. Anyway, we're just going to continue to watch this land here, and then we'll look for any long trades to the upside through all of that. So in this case, wheat is telling me that we've got further upside, but we've got further downside to go just yet as well. Soybeans fallen out of bed, so we're looking at this as 1 2 3 4 5 for the A wave, the B wave here, probably 1 and 2 and 1 and 2, and this is obviously the third wave here, so we can bring this down a little bit further here. We're going to see a 4th wave and a 5th wave, and probably even another one. So we'll look how it gets down to here, and you know, we'll look for a buying opportunity if that comes into play at that point. But soybeans, soft commodities, still have further to move down. Sugar here, it's not labeled this chart, but we wouldn't be interested in this until it found support on this major trading level 2 here. But in the meantime, we can, as I've been saying, we still got further downside, but it's really holding up quite well. But normally it's the same thing, you know. So anyway, this trend here needs to be rebalanced. It's basically like that, and we'll see further downside for all of those soft commodities. Okay, over to the energy sector. This is XLE here, and these are constituents within that market. And one of the interesting things here I find is that in terms of Elliott wave, this move that's come down here is not in 5 waves, it's in 3 waves, so it's corrective in nature. If it's corrective in nature, then we should be taking out the top here. It's possible that all of this move up here is wave A here, and then B wave here, and then a C wave up here. But whichever way you want to sort of like, you know, look at this, we should be going up further here, right? So then it's just a matter of like, well, how do we count this? I can count this here as an example as wave 1 and 2, and we'll be looking at crude and gas, but 1 and 2 here, and then we could look at this as 1 and 2, 1 2 3 4 5 for the 3rd wave, 4th wave and 5th wave. So we could look at this as wave 1 here, 2 here, and then all the way over here to 3, 4 here, and then 5 up here. So we could look at the whole move up here as 5 waves, and if that was the case, then we would be moving down in a you know, in an ABC sort of pattern. So we could actually, for this sector, I'm just giving the worst case scenario, not the worst case, but not a good case, we could move back down to $50 at that point. Oh, 50, this is an index, isn't it? But I'll copy that and put this here because it's a major trading level at that point. So the other thing that I was thinking of is that we're looking at this as wave 1 here and 2 here, because this is really quite strong here, isn't it? It's got the personality of a third wave. So we could look at it as wave 1, 2, and then 1 and 2 here, and then 3 here and 4 here. Whichever way we want to look at this, this move down here is completing. This is a daily chart. We can see that the stochastics has moved, you know, at this point, so we know it's going to snap back. So that's going to snap back. So all we need to do here is, normally when we have a correction, when we have an ABC correction, it's normally, the A wave is normally really, is fast and sharp. And because low volume into the top, and then people are still buying, they trigger out the stops and they all get triggered and all get sort of wiped out. So the wave A is normally quite sort of haunting in that respect, you know. But what it does say as well, apart from being scared in that, is that it helps it confirm it as an A wave, you know. That's the beauty of it. And then we'd want to see the C wave here be on more of an angle than the A wave. So what we're going to do is we're just going to chill on this, and if this move down here on wave C is on less of an angle than wave A, and there'll be 5 waves in here, it may not have landed just yet, but it's not going to go too far past 70 and 72 here. And then we'll see a correction, probably not that high either. Getting a bit excited there, Pete. So probably, anyway, we'll check on that when it comes into play. We'll look at that on the intraday. And so we'll be interested in looking at this as a long trade opportunity over this side of the fence over here when this comes in. We're not interested in the B wave, not interested in shorting the C wave here, and then we'll be moving up to 1 here, 1 being the strongest number in the market, after 5, and then 8, and then 3. So yeah, anyway, that's that, and that takes us over to the the crude section, which is also falling out of bed as well. So in the bigger picture here, there's just a 4-hour chart. We're looking at this here. I mean, it's a bit like sort of gold and silver in its way, and copper and that, but an A wave here, a B wave here, and a C wave to come down. Now the C wave, well, this C wave would be, there's 2 counts going on over here. So we could look at this here as an A wave, a B wave, a C wave to here, a D wave, and an E wave like gold. And that brings in a pretty good case here, because I've got the A wave, the B wave, and then 1 and 2 and 3 and 4 and 5. You could probably not count that as wave 1 here, so then you'll have to start looking at this as WXYs, but I'll just keep it as simple as I can. And so the situation here is we've either got a triangle pattern, so this will come out into a triangle pattern, and this will be 3 waves to the upside, so we'll keep an eye on that. And then we'll have wave E over here for this, and that will also be in 3 waves. So did I say 5 waves up here? Anyway, 3 waves up here. So we've either got the triangle pattern, or we're going to have this as 1 and 2 and 3 and 4 and 5 coming down here, finishing off here for this. So yeah, nothing really sort of cooking here at the moment. You know, the 100, this is a CFD product, so the 100 here is just going to, 1's being the strongest number. It's just, it's not going anywhere. It's going to be spending time there. So nothing to look at really on the intraday chart at that particular point. For the natural gas market, we've either got at the top here, this is just 100 ticks, so we've either got wave 3, which is my priority count, or wave 5. So with wave 3 here, it helps me confirm it that I've got an ABC pattern here. So I've got 3 waves in the first leg here. So that tells me that the market is corrective, but we always need to be a little bit careful, and it ticks one box on the corrective side. Yeah, would like to tick a couple more. But either way, we've got wave A here, wave B up here, and then 1 from wave B, we're looking down to wave C over here, 4. So we've got wave 3 and wave 4 here. And we've got 1 and 2, and then 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave, and then we're looking down as 1. Let's just get this in here as 1 and 2 here, 1, 2, 3, 4, 5 for the third, the fourth wave here, and then down for the fifth wave here. We've got short trades in here. We've taken part profit here. We've got our stop sitting over here for that. You know, we don't want to be just putting a stop. Never put stops at whole numbers because you'll end up being taken out a lot. So we're going to look for the first high above the level here. Once we've got the first high in, then we'll put the stop on top of that first high above the level, and then we can bring it down at that point. So yeah, that's sort of where we are with natural gas at the moment. But yeah, it's not finished off just yet, and you know, it may be wave 4 here, or we'll get waves 3, 4 and 5 and have a bigger bearish picture at this point. We just got to stay with the facts, and we'll see what the evidence produces, and then we'll move in with that. Nothing else to really do about that, but this trade's going okay, so we'll just leave that as that. And iron ore, so this is Chinese iron ore. So we've got wave A here and A, B, C for the B wave, and then 1 and 2 going down for 3, 4, 5. We've got a little, this is the box here for this move up here, the 50-60% retracement level, and it's sitting at 650 here, which is a medium level, halfway between 5 and 8 Fibonacci numbers. And so being wave 3 and 4 here, and then this wave 3, 4, 5, and then 4 again here, we're going to spend 2 weeks in here. We can see that from the stochastics we're going to get a bounce back up, so we can do that. If a mistake has been made, then this would be an A wave, a B wave and a C wave, and then we'll go straight up from that point. If we're going to go straight up from that point, well then we'll start buying BHP and those sort of stocks, FMG and all that, after we get a nice impulse wave here above the 801 at that particular point in time. I won't look at the Singapore seaborne chart at the moment. We can do that in the Australian market. And US copper here, look, it's very much the same as crude and gold and all of those sorts of things. So there's a couple of patterns that can play out here. So in this instance here, we're looking at 5 waves coming down. So it's at this medium level here, 40. So it's going to stick around here for a little while. It's going to get support at minor group 2 here. So 65, 72 and 80 here, or 380 here. It's going to find support here. Once it finds that move, once that 5 waves is finished here and it moves back, I want to see if this move back is corrective. If it's corrective, then we're going to short it down here further. Otherwise, we'll be looking to trade it long at that point. But we need it to finish its move here, and then we'll work on this particular trend here to build our next trade into that market. Over to the nickel market here, we've got a little wave 4 here, and we've got 1 and 2 and 1 and 2, and then we've got 1, 2, 3, 4, 5 for the third wave, fourth wave. I'm not quite sure how to handle this here. I'm not sure if I should put wave 4 over here because this is a bit of a B wave in here. Anyway, this market's not going very far at all. It still needs to come down, but it'll be hanging around the 25 for a little while here. So I just need to figure out if we've got 1 and 2 and 3 and 4 and 5 down here, or I need to put wave 4 over here. So not much cooking here. We might be able to trade this down here, but even so, you know, the extension's in wave 3 here, so wave 1 here and wave 5 are going to be much the same in length. So nothing really sort of going on here with this one as such. So the uranium here just on 100 ticks, so we're looking at this being a bit bearish here. So I've counted down here as 1 and 2 and 1 and 2, and then 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave for the third, the fourth. We wanted to short below here, so it has gapped down, which is nice. And the fact that it takes this low out here after it's retested, this retest didn't go as high as that one, it got it there. So it's really sort of, you know, pointing to the downside. Not that there's a lot in this, because once it lands here, probably 1650 to 1720 in that range, and there will be a lot of support at the 18 here as well, but we should see some sort of ABC over here before seeing further downside for this. So we should really have a look at the bigger picture, but I won't do that at the moment. Yeah, that's all good. That's Bitcoin. So we've done, we've been through the commodities. That's it. So I'll leave it at that. Thanks for tuning in. Cheers.